All right, imagine this for a second. You wake up one day, you check your portfolio, and something that everyone around you called dead is suddenly up thousands of percent. Sounds crazy, right? But here's the thing. This has already happened before. Not once, not twice, but multiple times in the crypto market. And today we're going to talk about why a lot of people might be completely misunderstanding what's really going on with XRP right now. Welcome back to Bullion IQ. I hope you're having a great day wherever you are. If you're someone who's been watching the crypto space, especially XRP, you already know things can get emotional real fast. People get excited when prices go up, and they lose faith when things slow down. So before we go any further, if you're into Ripple, XRP, and the future of digital finance, go ahead and drop an X in the comments. Show some support, hit that like button, and let's really break this down in a way that actually makes sense. Now, here's what caught my attention today. I heard someone say very confidently that XRP is completely finished, done, no future. And the reason? Because it's sitting around 138 and hasn't exploded recently. And honestly, this is the kind of thinking that causes people to miss the biggest opportunities because they're only looking at the present moment, not the bigger picture. Let's talk facts for a second. When people say, look at the track record, I agree, but not in the way they think. If you actually look at XRP's history, it's not weak. It's one of the most explosive assets we've ever seen. We're talking about a gain of over 23,000% since its early days. That's not average, that's not normal, that's life-changing. Go back about 10 years, XRP was literally trading at a fraction of a penny. Most people ignored it then. Even as recently as 2020, it was still under 10 cents. Fast forward to more recent market cycles, and we've seen it jump from around 30 to 40 cents and deliver hundreds of percent gains in a very short period of time. That kind of movement doesn't happen by accident. It happens because of positioning, timing, and underlying fundamentals. And this is where most people get it wrong. They focus too much on price and not enough on percentage. In investing, percentage is everything. Let me explain it in a simple way. Take Bitcoin, for example. At around $74,000, if it goes to $100,000, that's about a $26,000 increase. Sounds big, right? But in reality, that's roughly a 35% gain. So no matter how much money you put in, your return is limited to that percentage. Now compare that to XRP. At its current price levels, even a move to $100 would represent something like a 7,200% gain. Think about that difference. We're not talking about small returns. We're talking about exponential growth potential. And that's exactly why early investors in XRP became millionaires and even billionaires, not because they bought something expensive, but because they bought something undervalued before the move happened. And here's the uncomfortable truth most people don't want to hear. The real money in markets is made during boring times, when nothing seems to be happening, when prices are moving sideways, when people lose interest and start saying things like, it's over. That's actually when smart money is accumulating. That's when positions are being built quietly. We've seen this pattern over and over again with XRP. Long periods where it looks like nothing is happening. Then suddenly out of nowhere it explodes. Massive moves, fast gains, and everyone who was doubting it starts asking the same question. Why didn't I buy earlier? And I'll be honest with you, in my personal opinion, we are heading into another one of those phases. Not just based on hope or hype, but based on history and what's developing behind the scenes. Because what's coming next isn't just another random pump, it's a shift into a new stage of the financial system, one that could be powered by utility-based digital assets like XRP. Now think about that for a second. This isn't just about charts and percentages anymore. This is about real-world use, real infrastructure, real integration into global finance. And when that kind of shift happens, the assets that are positioned correctly don't just grow, they explode. But here's the catch. Most people won't be ready because they'll still be focused on the short-term price, the daily fluctuations, the noise. They'll ignore the fundamentals, they'll ignore the history, and by the time the move happens, they'll be chasing instead of positioning. So when someone says XRP is dead at 138, you have to ask yourself, are they looking at facts or are they reacting to emotions? Because the data tells a completely different story, a story of explosive growth, repeated cycles, and massive opportunity during the quiet phases. And right now, whether people realize it or not, we are in one of those quiet phases again. The kind that doesn't feel exciting, the kind that tests your patience, but also the kind that has historically come right before the biggest moves. Let's take this a step further because what's happening right now isn't just about price action or charts. There's something much bigger developing in the background, and if you're only watching the market day by day, you're probably missing it completely. This is where things start to get really interesting, especially when we look at what's happening on the regulatory side and how that could change everything for XRP and the entire crypto space. So recently, Brad Garlinghouse, the CEO of Ripple, came out and shared something important. He talked about celebrating 11 years at Ripple, and what stood out wasn't just the milestone, it was what he said about the journey. He made it clear that when he first started, he never expected the company would still be fighting for regulatory clarity all these years later. Think about that. Over a decade of pushing through uncertainty, legal challenges, and constant pressure from regulators. But here's the key part. He didn't say it was a wasted effort. He said the fight has been worth it, and that tells you something, because companies don't keep pushing that hard unless they see a bigger outcome ahead. He also mentioned that after spending time in Washington, D.C., he had strong conversations with major political figures, including Senator Tim Scott and others who are directly involved in shaping financial policy in the United States. Now, why does this matter to you as an investor? Because regulation is one of the biggest barriers holding this market back. For years, institutions have been sitting on the sidelines, not because they don't believe in crypto, but because they don't have clear rules. They don't know how to safely enter the space without risking legal trouble. And that's where this idea of the Clarity Act comes in. According to what's being discussed, this could be one of the most important pieces of legislation for crypto in a long time. It's designed to finally define how digital assets like XRP are treated under the law. And if that happens, it opens the door for massive amounts of institutional money to enter the market. We're talking about banks, hedge funds, and large financial players who manage trillions of dollars. But here's where I want you to think a little deeper. While this sounds incredibly bullish, and it is, there's something important that most people are overlooking. All of XRP's biggest moves in the past happened without this kind of regulatory clarity. Let that sink in for a second. The explosive runs, the massive percentage gains, the moments that created life-changing wealth, all of that happened in an environment filled with uncertainty. So what happens when you remove that uncertainty? What happens when the rules are clear, when institutions feel safe, and when capital can flow freely into the market? That's the kind of scenario we could be moving into right now. And if history has shown us anything, it's that XRP doesn't move slowly when conditions line up. It moves fast and aggressively. At the same time, there's another layer to this story that doesn't get enough attention. And that's the real world integration that's quietly happening behind the scenes. This isn't just speculation anymore. There are actual developments, actual partnerships, and actual use cases being built. For example, there has been discussion around documentation showing connections between Ripple's technology and major financial systems like FedNow and Fedwire. Now, whether you fully understand those systems or not, just know this. They are critical parts of how money moves within the financial system, especially in the United States. So even the idea that Ripple is being mentioned in the same conversation as these systems is a big deal. Because what it shows is that Ripple isn't just trying to exist in the crypto space, it's trying to integrate with the traditional financial world. It's positioning itself as a bridge between the old system and the new one. And if that strategy works, the value of XRP isn't just based on hype anymore, it's based on utility. And that brings us to another major development. Ripple's president, Monica Long, recently highlighted a partnership involving a large Korean financial institution, Kyobo Life Insurance. Now, this isn't some small startup, this is a well-established company, and they're working with Ripple to explore on-chain financial infrastructure, specifically using something called Ripple Custody. What does that mean in simple terms? It means they are looking at ways to bring real-world financial assets onto the blockchain. Things like bonds, settlements, and other traditional financial instruments. This is what people mean when they talk about tokenization, the idea of taking real-world value and representing it digitally on a blockchain. And this is where things start to connect, because if major institutions are moving in this direction and Ripple is involved in building that infrastructure, then XRP becomes more than just a cryptocurrency. It becomes a tool, a piece of the system that helps move and settle value quickly and efficiently. Now, here's the interesting part. Even with all this positive news, the price doesn't always react immediately. And that confuses a lot of people. They see announcements, partnerships, progress, and then they look at the chart and nothing seems to be happening, so they assume it doesn't matter. But that's not how markets work. Markets don't always move in real time with news. Sometimes there's a delay, sometimes the groundwork is being laid quietly, and then suddenly everything catches up at once. That's when you see those explosive moves that seem to come out of nowhere. And this is exactly what we've seen with XRP in the past. Long periods of silence followed by massive breakouts. People doubt during the quiet phases, they lose patience, they move on, and then when the move finally happens, It's too late to get in at those early levels. This is where things really start to click if you've been paying attention. We've talked about the history, we've talked about regulation, we've talked about partnerships and real world use. But now the big question is this: what does all of that actually mean for the future price of XRP? Because at the end of the day, that's what most people care about. Not just the technology, not just the news, but where this could realistically go and what kind of opportunity is sitting in front of us right now. And this is where things start to get uncomfortable for a lot of people because the numbers we're about to talk about sound crazy at first until you actually break them down. So let's go back to something we mentioned earlier. XRP has already done over 23,000% gains in the past. That's not speculation. That's not a guess. That's historical fact. And when you hear a number like that, it's easy to dismiss it and say, yeah, but that was early. That can't happen again. But here's the thing: markets move in cycles, and when the right conditions are in place, similar patterns tend to repeat. Now imagine applying that same kind of percentage move to where XRP is sitting today. A 23,000% increase is roughly a 230x return. If you take that and apply it to current price levels, you're looking at something in the range of around $300 or more. And I know the moment people hear that, they immediately say it's impossible. They say it's too high, too unrealistic, it can't happen. But let me flip that perspective for a second. Is it really more logical to believe that an asset which has already proven it can deliver massive exponential growth suddenly loses that ability completely, especially at a time when it's more developed, more integrated, and closer to real world adoption than ever before? Because that's the part people ignore. XRP today is not the same as XRP 10 years ago. Back then, it didn't have the level of partnerships, the level of infrastructure, or the level of attention it has now. Today, we're talking about global conversations, institutional interest, and real financial systems potentially integrating blockchain technology. And this ties directly into something even bigger: global liquidity. Because when you start talking about prices like $100, $300, or beyond, the first argument people make is about market cap. They say there's not enough money in the world to support those numbers. But what they fail to understand is that liquidity in global finance is massive. We're talking about trillions upon trillions of dollars moving through the system every single day. If even a small portion of that liquidity starts flowing through blockchain-based systems and XRP plays a role in facilitating those transactions, then the valuation model starts to change completely. It's no longer just about speculation. It becomes about usage, demand, and efficiency. Now, does that mean it's guaranteed? No, nothing in this market is guaranteed. But what it does mean is that the possibility is there, and it's backed by more than just hype. It's backed by trends, by development, and by the direction the financial world is slowly moving toward. At the same time, you have to understand the psychology of the market, because even if everything lines up perfectly, the majority of people still won't benefit. And the reason is simple: they won't hold long enough. They'll get shaken out during the slow periods, they'll sell during small dips, or they'll take small profits and miss the bigger move. We've seen it happen over and over again. People doubt during the quiet phases, they ignore the accumulation period, and then when the price finally starts moving, they chase it at higher levels. And by that point, the risk is higher and the reward is lower. And this is why patience becomes one of the most important factors in this entire space. Not just patience in holding, but patience in understanding how these cycles work, because the biggest gains don't happen overnight. They happen after long periods of buildup. Right now, we're in a phase where a lot of people feel like nothing is happening. The excitement isn't there like it was during peak bull runs, the headlines aren't as loud, and that's exactly why this phase matters so much, because historically, this is where the foundation is built for the next major move. And when that move comes, it doesn't usually give people a lot of time to react. XRP in particular has shown that when it decides to move, it moves fast. Huge candles, rapid gains, and sudden momentum that catches people off guard. One day it's quiet, the next day it's everywhere. And the real decision comes down to this: do you wait until the move has already happened and everyone is talking about it, or do behind all of this? Because this is usually where most investors either succeed or completely miss the opportunity. It's not just about knowing the facts, and it's not even just about understanding the charts. It's about understanding how markets behave when emotions take over. And in crypto, emotions are everything. Right now, XRP sits in that uncomfortable middle zone where nothing feels exciting to the average person. The price isn't making nonstop headlines. Social media isn't fully buzzing like it does during a major bull run, and most casual investors have either lost interest or are waiting for clear confirmation before they do anything. But historically, this exact phase is where the real positioning happens. because by the time things look obvious, it's usually already too late. And this is where the biggest disconnect happens between retail investors and long-term market cycles. Retail tends to chase excitement. They enter when things feel safe, when everyone is talking about it, and when the price is already moving fast. But smart money behaves differently. It doesn't chase hype. It builds positions during uncertainty, during boredom, and during doubt. If you look at XRP's history, this pattern shows up repeatedly. Long consolidation phases where nothing seems to happen, followed by sudden aggressive expansions in price. And every single time that expansion begins, the same reaction happens from the crowd: shock, disbelief, and regret from those who waited too long. Now, tie that back to what we've already discussed. We're seeing regulatory discussions that could finally bring clarity. We're seeing institutional conversations that didn't exist at this scale years ago. We're seeing real-world financial institutions exploring blockchain integration and tokenization, and we're seeing Ripple continue to position itself inside that evolving system. Individually, each of these developments might not seem like a price-moving event, but markets don't move based on single events. They move based on accumulation of conditions. And when enough of those conditions align, that's when major shifts happen. Think of it like pressure building up behind a wall. Nothing seems to change for a long time. Everything looks stable. And then suddenly, when the pressure reaches a certain point, the breakout happens quickly and forcefully. That's the kind of dynamic crypto markets are known for, especially with assets that have high volatility and strong narrative cycles. Now, let's address something important that often gets misunderstood. When people hear predictions like XRP reaching extremely high prices, their first reaction is usually disbelief. They look at the current price and assume that big moves are unrealistic, but that reaction is based on linear thinking. Markets don't grow in straight lines, they grow in cycles, and those cycles are driven by liquidity, sentiment, adoption, and speculation all interacting at once. What matters more than any single price target is the direction of the trend and the strength of the underlying narrative. And right now, the narrative around digital assets tied to real-world utility, cross-border payments, and institutional adoption is getting stronger, not weaker. At the same time, you also have to understand that markets don't reward certainty. They reward positioning before certainty arrives, because once certainty is fully established, the biggest upside is usually already gone. That's the uncomfortable truth most people only realize in hindsight. And this is why patience becomes such a powerful factor here. Not passive patience, but informed patience. The kind where you understand what is being built, even if it hasn't fully shown itself in price yet. The kind where you're willing to sit through boring periods because you understand what those periods historically lead to. But there's also another side to this that people often ignore, and that's risk management. Because while the upside narratives are important, no market move is guaranteed. Even the strongest setups can take longer than expected or evolve differently than anticipated. That's why smart participants always balance conviction with caution. What makes XRP interesting in this phase is not that it is guaranteed to do anything specific, but that it is sitting at the intersection of multiple powerful forces: regulation, institutional interest, and financial modernization. When these forces align around any asset class, the outcome is rarely quiet. And yet, even with all of that, the market will still do what it always does. It will test patience, it will shake out weak hands, it will create doubt at exactly the wrong moments, and it will reward those who are able to stay consistent through the uncertainty. So when you hear extreme opinions on either side, whether it's XRP is dead or XRP is going to explode tomorrow, the truth usually sits somewhere in between those emotional extremes. The real story is slower, more complex, and far less exciting in the short term, but potentially much more powerful over the long term. And that's the perspective most people miss. They focus on moments instead of cycles. They focus on noise instead of structure, and they focus on emotion instead of behavior. Because at this point, you've seen both perspectives. You've seen the extreme bearish argument that says XRP is done simply because it isn't exploding today. And you've also seen the extremely bullish narrative that focuses on massive future valuations and exponential percentage gains. But the real edge in markets doesn't come from picking extremes. It comes from understanding context. Right now, XRP is sitting in a phase that most experienced market participants recognize very clearly. It's a phase where development continues in the background. Partnerships evolve slowly, regulatory frameworks are still forming, and price action doesn't fully reflect long-term potential yet. This mismatch between fundamentals and price is exactly what creates opportunity, but only for those who are paying attention before the next expansion phase begins. And this is where most people struggle. They want confirmation before conviction. They want price movement before belief. But markets don't reward that mindset consistently. By the time confirmation is obvious, the majority of the move has often already occurred. That's not speculation. That's a pattern that repeats across almost every major asset class, especially in early stage or transitional technologies. If you look at XRP specifically, what stands out is not just the price history, but the repeated structure of its behavior. Extended consolidation phases followed by sharp, fast expansions, and those expansions are rarely gradual. They tend to be sudden, aggressive, and emotionally driven. That's what creates both opportunity and regret in the market at the same time. Now, when you combine that historical behavior with what's happening today, regulatory discussions moving forward, institutional engagement increasing, and real world financial infrastructure exploration, you start to see why so many investors are paying attention again, even if sentiment doesn't fully reflect it yet. But here's an important reality check. None of this guarantees a specific outcome, not price targets, not timelines, not even adoption narratives. What it does provide is a framework to understand probability, not certainty. And in investing, especially in crypto, probability is what actually matters. So instead of asking, will XRP reach a certain number? The more useful question is XRP positioned in an environment where large-scale expansion becomes more plausible if conditions continue improving? And based on everything we've discussed, that question can't be dismissed lightly. At the same time, it's important to stay grounded. Markets have a way of surprising both optimists and pessimists. They move slower than expected, then faster than expected, and almost never in a straight line. That's why emotional decisions, whether it's buying out of excitement or selling out of frustration, tend to be the biggest mistake most participants make. The people who tend to navigate these cycles more effectively are not the ones predicting exact prices, but the ones observing structure. They understand accumulation phases, they understand sentiment cycles, and they understand that boredom in markets is often just the calm before volatility returns. And that brings us back to where we started this entire discussion. The idea that XRP is either dead or about to explode is too simplistic. The reality is far more nuanced. It is an asset sitting inside a changing financial system, influenced by regulation, technology, and global liquidity shifts that are still unfolding.